Hello, and welcome to Victory Financial Fitness. I'm your host, Jocelyn Victoria. Today, we're going to take a deeper dive into reconciling accounts. Before the advent of debit cards, reconciling of checking accounts in particular was somewhat of a bigger deal because you would write a check to a merchant, and then there would be a delay between the day you gave them the check and the day that your check cleared your bank. Also at that time, there were not as many tools that we have now to get your bank balance in real time. And so you would rely on a bank statement, a monthly mailed, snail mail bank statement, and your records of the transactions that you completed in order to make sure that your records matched with your bank's records. Now, a lot of that has changed with the advent of debit cards because they hit your account so fast. But it is still important for you to keep a record of your transactions to avoid overdrawing your account, which you can still do just as easily and more quickly, even with debit cards. So we're going to run through the concept of reconciling accounts. And that simply means that you're making sure that what you show as your balance and what the bank shows as your balance really match up. And so sometimes if there's a transaction that has not yet posted to your account, that will have the financial institution showing one amount for your balance, and you may show a different amount based on transactions that you know you've already made that maybe haven't posted. Some financial institutions are accounting for this now and providing both your what they call your actual balance and your daily balance. So they're providing the information where they know that there's something that's about to be deducted from the account, and they're offering you a balance that shows that deducted already. So the financial institutions are catching up. However, it is still very important to make sure your records and the bank's records are in agreement. So I'm going to share my screen real quick and just show you a basic reconciliation of an account. So this is a simple month's or portion of a month's worth of transactions. So you have a starting balance in a checking account of $1,000, and we're just going to take some basic bills out of that. Now, I know that your numbers may not be analogous to this. That's okay. This is just for demonstration purposes. So we're going to start with $1,000. We're going to, in this case, write a check for the rent or mortgage, and let's say that we mail it. So there's going to be the mailing time, the receipt time, and then also the time to get it from your landlord or mortgage company's bank back to your bank to clear the check. We've got an electric bill at $100. We've got gas in the car and groceries at $50. Now, all those expenses all together should leave your account with a balance of $50. However, until the check clears the bank is going to show this cleared balance of $800. And that's where it's important to make sure your records and the bank's records agree, because if you were to choose to make transactions based on an $800 balance, when $750 is already allocated and spent basically for the rent, then you would put yourself in danger of overdrawing your account. So when you go to reconcile in this platform, this is YNAB. And so YNAB offers a reconciliation option, and it basically has you input your bank's balance, and then it's going to check that balance against what you have here. So if I check my bank balance and it's 800 and I tell YNAB, yes, that's correct, that's the correct balance, it's going to say, okay, your account's reconciled and we're good to go. And so when you go back to reconcile it or to view it, you're going to see that you have a $50 working balance. You have $750 that has not yet cleared, and that you've basically got that $50 to spend, but $750 is about to be spent as well. Now, when that actually does clear the bank and you mark it as cleared in YNAB, that'll bring your uncleared balance up here to 0. And then your cleared balance and your working balance are going to match, which means there's no transactions that you're waiting to clear, and that everything that the bank says has happened, or the financial institution says has happened, and your records say has happened, they all match. So that's the gist of a reconciliation of an account. It's just making sure that you've accounted for anything that may not yet have been posted to your account, and so that you're taking all those numbers into account when you're using your balance. We'll continue with this series talking about calendarizing our expenses and our bills, and I look forward to seeing you then. In the meantime, please remember that resources track diligently, stretch further, and always remember each day to make a joyful noise to the Lord. Thanks for your time. Have a great day.